Let's go right in now to the Bloomberg terminal and take a look at what we looked at yesterday, but is still with us today, and that is a raging debate over inflation. The red line is real simple. That's top line inflation. Down, down, down we go recently. Over here with lower oil prices. This chart going back to 2007, the beginning of the crisis. Huge volatility on that red line. The white line buried within the soup, this is an ugly chart, I'm sorry, is a PCE core PCE rather, which is below the 2% line. And this is that worry about subdued inflation below 2%. And a lot of people saying, maybe not, because they're looking at any other series. In this case, I use a Cleveland Fed. I do this in honor of LeBron in the basketball finals, the NBA finals. Cleveland Fed is smoother. It doesn't take out oil and energy. It takes out the excesses every 30 days. And you get a beautifully stable inflation rate. It's not like core PC. It's nicely above 2%. Brennan, this shows a debate. Yellen is clearly with the optimists of a little more inflation out there.
Right, but it also means that if you use that measurement technique, that you miss the point at which an outlier becomes a driver.
Fair.
And so that, I mean, you're sort of, I mean, it's a more hopeful measure, but with hope comes consequences.
The consequences can be there, but there's been a lot of mathiness on this over the years by Todd Clark and many other by Todd Clark and many other Fed PhDs in Cleveland. Dallas has a series, and I'm waiting for Richmond to have a series. I'm kidding, but this is Cleveland Fed, and it's more stable, and it presents what all of our viewers and listeners know. The pros go, inflation's under 2%. Every single viewer is going, yeah, right.
But there's a key thing in inflation. When you think of core inflation, Tom, that nobody considers.
Please.
I get a lot of feedback of how can you exclude food and energy? Those are the things that go up the most, and It's not fair. How about interest expense? How many of the viewers and listeners have a mortgage? I've lowered my monthly payment well over $1,000 a month since 1996 when I bought my house in Bergen County. So you can't. My household has deflationary forces over the course of that period because of the.
You bought your house in 1996. That's all that matters.
No,
but then I refied. Lever up.
But Tony, you live out your front hallway's bigger than Brendan's and my two apartments. I mean,
come on.
There we are. Anyways, there we are this morning on inflation. Cleveland CPI is the one that I look at.